Well, good morning, everyone. Welcome to our Thursday morning trading session. Had to think about that for a moment. Losing track of the days of the week. All right. So the markets just opened up, and it appears as though we opened with a little bit of a gap to the downside. Nothing too terrible. Trading left off here around the 48.72 mark yesterday. Relatively quiet through the Asian and the European sessions. Took a little bit of a tumble a couple hours before the open. So we have this little bit of an opening gap, or had a little bit of an opening gap. It appears as though that gap may have been filled now. And we're seeing a little bit of a bounce. This, of course, on the Hawk microscalper. And it's working a green bar sell signal, which tends to develop toward the end of a trend. We saw a little bit of a test of the extreme right here, a retest of the low. I'm not sure if that's going to be enough to actually send this market into a reversal, or whether we're going to see a bigger sell-off here. Now you could short this green bar sell. What are we? We're only a couple, 3 minutes into the session. Let's see what else we're getting. Well, we're into the hard edge here on the Raptor and the Eagle. Falcon looking a little bit more bullish. All right, we do have some obvious support below the market, and of course this is very early still. So if you're going to take a trade out of the open, I think it's important that you limit your risk exposure the best that you can. In fact, to that end, I thought we would talk a little bit about risk and stops today, depending on what the market is doing, of course. I've gotten some emails of late from members who are a little bit concerned about stop placement. And more accurately, the way that I place my stops. All right, I'm going to take a look at this signal. Can I take that? All right, I will. Now, I'm going to be a little bit more aggressive on this Eagle trade. I could wait for the ATR to turn over. In other words, I would need to wait one more bar to trade. But if I wait for that second bar to finish, I'm going to be relatively close to this swing low. My concern is, what if the market decides to pivot somewhere around that swing low? If I don't enter until down here, until around there someplace, well, I have very little room to adjust my trade, right? If I get in a little bit earlier, then I may have an option to see how the market's reacting, allow it to bounce around a little bit, maybe even get my trade to break even. And now we're also seeing an opportunity for a second push on this entry, which is nice. The signal was trying to print, and you can see the market is just floundering here. It goes a tick higher, and the signal disappears. It goes a couple ticks slower, and the warning dot reappears. Come on, get up there. All right, well, they're still chopping around a little bit. Let's talk about stop losses. So I get a few emails almost every week from people saying that my stop losses are so far away that people can't duplicate my stops. All right. And I think that's not so much from the fact that you can't afford the dollar amount, because really, quite frankly, in the world of trading, $300 is not a very big risk amount. Rather, what concerns people is it appears to be very far away, doesn't it? This stop seems to be quite far away from the current price. And I think that comes from a habit of people placing their stops very, very tight. You know, if you've been trading for any time at all, you're probably used to placing your stop just above the high of the signal bar. And you're probably used to seeing some larger profit objective. You're probably, sorry, wrong button. You're probably looking, you know, oh, there's going to be profit down here and I need to keep my stops tight. You know, this whole risk-reward ratio that has been beat into traders' heads for so long. Fundamentally speaking, the best place to put a stop is always above a swing point. Why is that? Well, that shows you where the buyers and the sellers have really dug in. It's hard to say whether the sellers overwhelmed the buyers or the buying just dried up, but the end result is the same. Well, actually, I suppose if the buying stopped, the sellers did end up overwhelming the buyers and pushed the market down. Down here, the selling stopped and the buying took over from the sellers. So we get a little bit of a rally. To me, the important thing about placing a stop is to keep it out of harm's way. It's like that kids game that we all played when we were kids, tag, right? Your objective is not to get tagged. This is not a loss unless it gets hit. So why would you place your stop so close that you can get tagged? And, you know, if you were like me, you would always get as close to the kid who was it as you could, and then you'd run away as fast as you could, right? so that you didn't get tagged. But what happened? The signal never printed. Let's pretend the signal printed, and you see the market back up. You're stopped out. Now I need to adjust this trade a little bit for the new signal that's printing here. But okay, here, let's do this. We're in a demo room. Let's put the order right there. Now note the risk amount doesn't change. Now I know some of you don't believe me yet that the best way to trade is to keep your risk constant. And I think that's part of the issue, is that you would rather go in here with a single contract for $150, or I guess $155 to be precise, rather than take two contracts for $300. All right, well, if that's the case, dial down your risk amount, or just throw a single on it. But the point of the exercise is, if you're going to risk $100, why would you not keep your stop a little bit further away? It's going to cost you $300 regardless. Why would you not try to give this trade a greater chance of getting to its profit objective rather than its stop loss? You know, it's funny how often traders will accept an early stop out. And I think that's another piece of bad advice, or not bad advice. It's good advice, but it's been misinterpreted. Traders hear all the time, it's to your advantage to take an early stop out, right? Cut losers short, let profits run. That's hammered into everybody's head. How do you cut losers short? Well, you take an early stop out, right? Well, yes and no. An early stop out is only advantageous if the market doesn't along without you and get to your profit objective. And how often has that happened? If you're like me, more often than you choose to count. Far too often. All right, so we're still kind of waffling here. I hope that makes sense. If it doesn't, please let me know, because we're just kind of bouncing here between signals. Oh yeah, a lot of yellow bars clustering up again. And here too, you know, I've mentioned this in the trading room before. Don't trade in a vacuum. Don't just look at these last three bars. You know, I see people all the time shrink up their charts to nothing so that this is all they see. You have to consider everything else that's going on the chart. Don't write me and say, Eric, the first trend change signal didn't work out here. Actually, let's not look at this. Let's look at the Falcon. Okay, I guarantee you, dollars to donuts, somebody's going to write me today and ask me why, Eric, why did the trend change signal not work out? And they probably set up their trade something like this. All right, class, let's see if anybody wants to play. Why? What should I write this person when they write me today and say, Eric, why did my trend change signal not work out? It's a high probability signal. Why did it not work out? It brought me in, it stopped me out. Why did that trade not work out? Those of you brand new in the room are excused, but I see a lot of familiar names here. So somebody step up. Give me an answer. And don't be shy. We're on the internet here. Chances that we will ever meet face to face are pretty slim. And chances that you're going to meet anybody else from the room are pretty remote as well. So don't be shy. Yeah, okay, got a couple good answers here. Mr. Buckaloo says it's in the middle of the trading range. Well, absolutely it is. And not only that, but we're trying to buy in what seems to be a downtrend. Right? We've got a little retest here. We have a market that's maybe trying to head lower. This could well end up being a bear flag. And Paul got the other part of it. Didn't give the trade enough room. Okay, yes, it's a high probability signal. The trend change signal is a high probability signal. Yes, we should take it. But the conditions are such that maybe it's not going to work out. Or maybe it's going to struggle. All right, well, why don't we dial down the risk amount? We can still take it, but why do we have to go in for the whole enchilada? Let's set up the trade like that. Oh, okay, if we're going to do that, trade manager says, nope, sorry, Eric, you can't afford it. All right, what if we try 1.5% of our capital? Still very conservative. All right, I can take that. $235. Let's take a flyer on it that will reach our profit target before we hit our stop loss. The other thing we can do, excuse me, the other thing we can do is we can set up for a second push on the entry. Namely, we allow the signal to engage, and then we allow the bar to retreat, right? You've seen this happen. The signal prints, the market pushes back a little bit. Now we know the limits of the bar. So you could actually set up your signal to buy something like that. And in that case, you would not have been brought in. But let's pretend for a moment that we have been brought in. Okay, so we're long on this market. We're currently taking a little bit of heat, but we're not stopped out yet, are we? We're still in this trade. It's a high probability signal. It may well continue higher still. Now, if we print a sell signal here, things get a little bit grayer, a little bit more uncertain, but we could very well see a sell signal print. We could see the market come down here, try to retest the lows, and then start to rally. We've seen this happen. And then when it starts to rally, okay, well now we can take our stop and we can start to roll it up. We may still get stopped out, we may still get reversed and the market tag us out here, but then we've lost even less than 1.5% of our capital. We've lost like maybe 3/4 or even 0.5%. But it was still worth a try. But these are ways that you can protect yourself. Doing things like the second push entry, doing things like paying attention to the whole chart, not just the last couple of bars. And these are things you need to do as a trader. I wish I could tell you that, all you have to do is watch the last couple bars, and if you see this happen, then enter a trade. If you see something else happen, then enter a trade to short or whatever. Trading is not like that. Well, let's put it this way. We made the DTS system as objective as possible so that we could avoid subjectivity. But there is still a little bit of subjectivity involved. For instance, here on the hawk, we're getting cluster after cluster of yellow bars. What does that tell us? Anybody? I know, I'm going to make you feel like you're all back in school. You're going to hate this. All of you are thinking, shoot, I hated school when I was when I was 13 and now I'm in school again? What does this tell us? Yeah, that's right. It's consolidating. It's choppy. Very good. So the market can literally go higher or lower from here. Therefore, when we do get a signal, it doesn't mean we're not going to take the signal, because the breakout is likely to be substantial. This one's not as prolonged as the chop we're in now, but when the breakout does come, when the signal does print, it could be a rather pronounced move. So we've got to wait a little bit, and I'm not going to go in heavy. I'll go in light in case it's a false signal. That's always a possibility. After a period of chop, we could see a false breakout. After all, the statistic is something like 3/4 of all breakouts fail. And that's because the buyers and the sellers, they're all expecting the market to be range bound, to consolidate. All right, so here we are again with our eagle signal. And we're getting our reaction. This gives us the opportunity for a second push on the signal, so we know the limit of the bar. We could set up the trade something like this. Look for some renewed momentum to bring us into the trade. But covering the trade overly tight is not going to make you more profitable. And the funny thing is, if I wished I could shrink up this chart. Oh, maybe I can. All right, does that really look like that big of a range given what the Nasdaq's been up to? All right, moderate maybe, but big? No. That's not a big range in the scheme of things. Look at the low to high here and the high to low here. That's a big range. That's not, practically not even a third of that. And conversely, if this trade doesn't engage, if it rallies higher, I'll put the stop up here and we'll dial it back, and you can see what it's like. Running a much tighter stop, it's going to look very, very cozy in the big scheme of things. Okay, crude oil also bouncing around a little bit. Here's the hawk for crude oil. You can see very, very consolidated, very, very sideways. Crude oil market debating the recent announcements from OPEC suggesting they're going to restrict production. We'll see. We'll see. It wouldn't be the first time an OPEC deal came apart. All right, so we're still kind of marching sideways here. Put that on the shelf for now. And this, my Eagle trade here is a little bit more aggressive, even though, wow, we've been trading almost a half an hour, 25 minutes so far since the open, and no serious move higher or lower. Another thing you could do when we have a market that's congested like this, look how nicely it's pinched between the secondary support and the primary support. You could use your OCO order and just let the market bring you in on a breakout. That's another option for you. Yeah, maybe we'll go with parabolic. A little tighter this time. Look for immediate momentum out of the breakout, perhaps. All right, so here come the buyers, or here come the buyers. We saw a couple upticks. Ooh, all that momentum. So producing another trend change signal higher now. Trend line goes from red to green. We've got that characteristic little up, down, up. Printing another buy signal. Still nursing this first buy signal. And this is actually a very good example of why you don't want your stops overly tight. You could have already been stopped out here. If your stops were down here, you could probably bring them below around the 48.59 area. The idea is if the market fails below here, it's likely to retest the lows, but it doesn't appear as though the sellers have any more control over this market than the buyers do. Oh, Paul's asking, Eric, how do I change the number of contracts on the OCO function? It defaults to this value up here, Paul. So if you'd like to trade more, change that to whatever you would like. The OCO function will give you an automated stop, and if you're running your auto break even, it will also place that. However, you will have to manually set a profit target, or you can just leave it as a runner. So let's say I'm going to take profit up here at the median line, and I'll look to take profit down here at the secondary support. Oops, that's not what I want. Shoot, I'm just about to cancel all my orders, so I forgot my OCO was still on. Sorry about that. Let's try that again. So we'll put an order to buy, an order to sell. My stops are enabled. Turn the OCO off. And now I can enter a profit order. Or I suppose the other thing I could have done is I could have made those an OCO order also, so that when that fills, the other one automatically cancels. There we go. So there's my profit orders. There's my entry order. I think that'll work. I haven't ever tried it that way before. We'll see. We're waiting. Sidleaf says we're waiting for an FOMC announcement. So there's the deal with that. All right, so our order moving away. May as well cancel that. Don't want to have too many open orders here. Some of you are going to be looking at this and saying, ooh, that's a rule of three. Well, yes, maybe. Remember, with a rule of three, we need to have it in the correct context as well, which means that, first off, we need to have a trend preceding. There we have a trend preceding. And then somewhere within the rule of three, hopefully before the third signal, we have a retest of the extreme, in this case, the low. And we need to print counter trend signals on the other side of the trading band. So there's a rule of three. This one, well, it's debatable whether this should be considered a trend. I suppose short term it is. And likewise, is that enough of a retest? Well, we'll see. We got a little bit of an uptick here. And I do believe I heard my breakout order get filled. Let's make sure we've got a stop. Yes, we do. All right, so had we trend change signal here, I do believe that we're very close, if not to our profit objective off of this signal right here. That was the one that we looked at initially. This guy right here. I know the parabolics always make the chart look a little cluttered, don't they? Oh, don't be looking back too far now. I'm going to hold my stops for a second. Parabolic, sometimes you've probably noticed, will squeeze the trade just a little bit and then again reverse and head the other direction. If you wanted a safer spot for your stops is even below here. I'll just let this one play out as is. So I don't know how well you can see it, but the parabolic hash mark is right there, just looking at the preview. So you see sometimes it engages the parabolics just a bit and then reverses and heads higher. Like I say, if you wanted, you could keep your stop just a little bit further away still. No, didn't matter. Now we'll see whether a bigger stop would have been more effective or not. So you can see from the width of these bars, we're getting a little bit more selling going on. Oh, I should check the eagle. I bet we've got an eagle signal coming back. Oh, we did too. We had a green bar sell signal. A little bit late on that one, but we'll see if we don't get a follow-up signal here. Now, technically, the band was bullish here. This goes back to the subjective part of trading. So technically, the band is bullish, but we're producing a green bar sell. Is that still a sell signal? If you're not sure, don't take the trade. But the fact of the matter is, the band just turned bullish, and probably because this bar here and this bar here went a tick or two too high. So that's not enough to get overly bullish on it. So would that be a high probability signal? Yeah, definitely I would. And I think you can see we had some good progression lower from there. So try not to put too fine a point on things. You know, I see people all the time too when they're looking at breakouts or judging where swing highs and lows are, and they micromanage. You know, they say, oh, well, this was a swing high, this was a swing low, oh, the swing low got breached, oh, the swing high got breached. Is that a swing point? Yes, definitely. The market made a little itty-bitty pivot here. Is this a swing? Yeah, for sure it is. But is that going to be enough of a swing to influence the market? Probably not. This one? Yeah, that's a influential swing. Why do I say that? Well, there was a considerable amount of momentum coming into it. This one up here, same thing. There was a whole lot of momentum coming up into that. This is going to be an influential price, as is this down here. Okay, so I have a feeling that I probably missed a decent signal here going through my little... Oh, actually, it looks as though the eagle was the best signal. This is very rare. We only see this occur like once every quarter or so, but the market bolting without really giving you a signal. Try not to get too frustrated with it. If you recognize that the prices are unfolding really quickly, you can always just hit your sell market button. Right? Just hit the sell market, throw a stop in, and again, don't go crazy here. Don't go in with like 3 contracts or something, but if you think the market is running away on you, place a reasonably deep stop, as deep as you can afford anyway. See, the trouble with a big move like this is we're likely to see a macro pullback through here somewhere. I might delete my break even and just see if this huge fall off doesn't trickle a little lower. Okay, seeing a little bit of a bounce here. No doubt it's due to some profit taking and whatnot. Let's see what else we got going on. Oh, not much. Really, it's just been that green bar sell signal on the eagle, and look at how much it looks like a bear flag now. Right? In hindsight, when it's developing, it looked a little confusing. That's why we rely on the signals. But in hindsight, it becomes a lot more obvious that, hey, this was nothing more than a retest of this high. We're making a lower swing, and the market falls off. And where does it fall off to? Well, right down here to the yesterday's lows. Oh, here comes that macro pullback now. I'm going to try to hold my stop just a little bit more. Get on the other side of that macro pullback. Peter says the Raptor gave a clear signal. Let's take a look at the Raptor. Yeah, so the Raptor actually gave you an early signal right here. This was a double pullback signal. So the market, when this was printing, this is what this looked like. So the market comes into the cloud, bounces out. There's signal number one. Does it again, goes into the cloud, bounces out. There's signal number two. This is your double pullback signal. It did wander a little bit after that, though. Like the eagle, you know, this little bit of a hiccup here, it would have had me thinking cloud crossover, but then it quickly fell apart. Problem with a big move like this, of course, is there's a lot of room for the market to retrace, right? But I do believe the momentum is fairly obvious. Yeah, thanks, Jim. Jim sending some fresh advanced decline numbers here. A little over 1,100 on the buy and 1,500 on the sell, so the market with a decidedly bearish flavor. Oh, they're fighting hard. We would have hit our break-even trigger and possibly our profit objective as well. I'm going to try to get cute here and see if I can't run this out a little bit. I want to move into a more aggressive stop, however. I'd like to get a little bit more breathing room here, a little bit more elbow room. You could bring in your stops above this 48, 55, 56 area if you're really nervous about the trade. Come on, just give me one more signal. Okay, on this next push lower, I'm going to start to get a little bit more aggressive with my stops, perhaps even the bar high-low. All right, there we go. That's all I'm going to give them. I'm going to force the issue now, get them to... No! All right, well, we'll see. It's the lack of follow through. Right now, I realize after a move like this, the market's going to be moving sideways. There's going to be some profit taking. There's going to be some buying. You can bet that there's a lot of buyers looking at yesterday's lows saying, oh, wow, the market's down to yesterday's lows, and look at what happened last time it hit this price level. Boom, up she goes. So to anticipate buying down here would be normal. All right, so it looks like it wasn't a bad idea to take the early stop out there as the market's making a rather strong reversal now. Look at that. Almost taken back the whole gain, or the whole decline. Paul's asking, would you consider a late filter entry on the Falcon if it develops? Short answer, yes. I'm not entirely sure. When was that timestamp? You wrote that at 4:18, so just right around now. So it must have been when this was out of sync here, and there was, it looked like the signal may print bearish again. Yes, definitely. Definitely. A late filter entry on the Falcon is a high probability signal for us, and let's see if I can't find you one. Oh, here's one. Okay, so the late filter entry occurs when the filter goes out of sync, comes back into sync, but the trend line itself never changes. It tends to be a very high probability signal. We had another one back here, which coincided with the trend change. Most signals, however, we don't want to see too many late filter entry signals within a trend. The first two you can pretty much take without even worrying about, but after that it can get a little bit dicey. If I started printing a third late filter entry signal, I would get a little bit cautious. It's not to say I wouldn't take it, but I would take steps to protect myself. I would dial down my risk amount. I would maybe take a second push on the signal. Maybe enter below a swing point if it was nearby, or whatever it would take to try to keep myself on the right side of the trade. See, technically this signal here, it is a trend change signal, but we have very little structure here to place our stop. Technically our stop, well, it should go up here, shouldn't it? Because that's the place we could place our stop and adjust it as necessary. Anything closer, if we put it above the swing high, well, we would have been stopped out already, which kind of defeats the purpose. dear, now we're getting first micro macro cross higher. I'm partly glad that I missed that because this too, would demand a very deep stop. And after that very quick move lower, I'm not so sure I'm all that comfortable being a buyer. But there you have it. It is a first micro macro cross. Oops, I was just about to hit the submit order. Oh, they're not going to give me another chance. Come on, give me another chance. It's not the kind of trade that's going to give me a warm, fuzzy feeling. I would much rather this moved into yellow bars so I could cancel it. Yes, it's like Jim posted here, the market on a 15-minute chart is just in a big chop zone, extending from down here to up here. All right, there's the first micro macro cross. Let's see if we get that follow through. Come on. If we break the high, we should be okay. This little itty bitty swing high. There we go, we kissed it. Need to see 48.60. Come on. Here we go, 59.5. There we go. Whew. No, I guess the buyers aren't done yet. Look at that. They're going to rally the market right back to where it started. Crazy. Well, we're into the hard edge again. Jim says the advanced decline has evened up quite a bit. We've got 1280 on the buy and 1450 on the sell. So what's that, about 150, 175 to the negative, which is nothing. In spite of the Nasdaq's rather violent decline and subsequent rally, crude oil has hardly budged. Here's crude oil. Same old, just plodding along. All right, here we go with a possible green bar sell again on the Eagle. This time I may wait for a, I was going to say I might wait for the filter to flip over. Oh my, the hawk continuing to tempt. We're going to get a 4-arrow consolidation. Come on, get down here into yellow bars. Let's spoil it. So I don't have to worry about taking that trade. We've got 1, 2, 3 signals Well, actually, I will take a 4-arrow consolidation off of a yellow bar, so a yellow bar won't save me there. Ay, 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 ay. Let's see here. Well, they've just kind of taken their time, which is fine with me. Fairly neutral market again, in spite of the big move down and another move higher. Now they're stuck. Can I do that? Oh, I can. All right, let's give it a little bit more elbow room. So I'm just anticipating a signal to print here. I could wait for it to flip over the ATR. That would make it a little bit more predictable. But what I'm hoping for is a retest of the low, and I'm hoping that by gaining an earlier entry, they slipped me a tick, but not too terrible. Oh, don't stop now. Soybeans also kind of sideways here this morning. Again, we've got these clusters of yellow bars. We do have a green bar sell that we could buy the failure of. We could cover it below there. Then we have a comparable signal here on the Falcon for soybeans, where we're working a trend change signal. Almost the identical identical signal. So if you're following soybeans, there's a couple of options for you there, making it look as though soybeans trying to get a little bit more bullish, maybe kind of, sort of. All right, come on, NASDAQ. So if this bar finishes on the close at 48.54, it will turn the ATR over, which will give us a little bit more of a downside bias. They keep kissing it, but they haven't finished it. They get down to 54.25 and then bounce up a little bit. Stinkers. There's half. 54.5. Come on. 54.25. Oh, there it is. Okay, now the way this market has been, I may go with, sure, let's go with the parabolics. Come on. Jim says it would fool a lot of buyers if we retested the 10 a.m. low. Well, that's way up here, unless you're referring to yesterday's low. No, that's over there, around the same zone. I'm not liking the hesitation. If we're going to retest these lows, then let's get busy. Oh yes, on the YM, of course. I forgot Jim's watching the YM. Come on. Come on. There we go. Come on. Sometimes you just need to encourage it a little bit. So Jim's pointing out a little bit of a divergence between the NASDAQ and the mini Dow. Let's put these over here. So here's the mini Dow. And yeah, it's funny, the mini Dow looking a little bit, or was looking a little bit stronger. It didn't have nearly the reaction the NQ did. So Jim's looking at this zone down here as a possible target. And I would think that's feasible. And now here's the NQ, however, which decidedly more bearish. Yeah, I agree. Jim says the NASDAQ tends to lead. I think so too. All right, let's get back here to the action on the Eagle. Again, not real keen on the hesitation here. I think I may, too late to force the trade to break even. There we go. There we go. I'll just take a break-even stop out if they don't turn it around from here. And again, my logic is just that where's all this downside momentum, right? We've got a sell signal. It may well trickle off from here. I just don't feel like hanging out anymore. This, in hindsight, could be our retest of the low, right? That could be our test of the extreme. In which case it is feasible. The market may give us a rule of three and a little bit of a bounce higher. And if that's not the case, well, then they better get busy. Okay, we need to see the market trade 48.51. Come on. There we go. All right. So if I didn't take the trade to break even when I did, I probably would take it to break even now. That's right. Come on down. There we go. Come on. Okay, hopefully we don't see something silly like a double bottom. All right, here we go. Big test. We're down here at the lows. Now, if we can just trade on the other side of this low, we'll probably see the market slip at least a couple of ticks, which should get us to our profit objective. Oh, don't be like that. All right, I'm gonna get a lot more aggressive here. In fact, go ahead, tap it one more time. There, that's all I'm gonna give them. Gonna walk out of here with a little bit of profit one way or the other. Whew, that was hard work. Okay, hooray for us. A couple wild swings this morning, making trading a little bit more difficult. And now we are back on hold. We did get a first micro macro cross lower right here. Obviously it's right near the lows, these guys right here. So the problem again, where do we cover the trade? Well, the best place to cover it is way up there. Why? Well, because the market may well make a bounce off of these lows. We could see a trading range develop today. We had a strong move lower. The buyers did a respectable job of rallying the market higher. However, I don't think they're going to muster a full reversal, not today. But they may be able to contain the sellers in a trading range type environment. That's why you need to keep your stop a little bit further away. All right, getting a little bit of a bounce there now off of the lows. We'll see if we get a soft edge buy signal here in the Raptor. It's certainly a more aggressive trade, to be sure. But you can consider this a retest of this low. If we produce a buy signal somewhere around here, it's reasonable to assume the market will try to retest the high, or at the very least get to the hard edge. Come on, Raptor. Well, here's the signal we haven't taken for a long time, and this might be a nice way to close out the session. So we've got a double dot signal building here on the Falcon. Now, what's a double dot signal? I don't point this out very often because it is a counter trend signal. The double dot signal occurs when, well, in this case, we've got a downtrend, but we're producing double dots. In this case, actually a triple dot. These double dots need to be printing within close proximity to each other. You might allow a bar between them, but rarely more than that. Oh, and in fact, because this is counter trend, we should only throw a single on here. We shouldn't go crazy. There we go. The double dot signal only works when you can tie it in with previous support, or in the case of an uptrend double dot, previous resistance. So what you want to be able to do is you want to be able to look back into the chart and say, oh, last time the market traded at this level, this is what the result was. So therefore, it's essentially trading a double bottom. We're looking for the market to retrace and rally off of this double bottom. We're looking for buying to occur. So here we have a double dot, but again, I need to be able to look back in the recent history of the chart. I don't want to have to go back for days and days to try to find some high that was here. But let's say, I look back here and there was a high and there was a rather substantial decline off of that high. If it wasn't too stale, yeah, that's all right. That would be, within the chart itself, it may be worth trying to short it. So here we are, we're trying to buy this double dot now. And like I said, I don't point this out very often because it is counter trend, and I really don't want you looking for counter trend signals, but it's similar in a way to the soft edge buy signal that we're going to get on the Raptor. And we could set our swing stop below the low. All right, the market could thrash about here a little bit, but I'm fairly confident we'll see it try to retest the top end of the trading range. The buyers a little bit more subdued than they were the last time they were here. Good for you, Jim. It's always nice to take a little profit. Jim says he shorted the YM at 57, punched out at 36. So here's the YM now. Yeah, it's trying to trade through the lows here. The upper trend line is relatively easy to draw. The lower trend line, not so much. I'm almost tempted to draw it like that. Kind of highlight the trading range a little bit. All right, well, I think we're going to button up the room here this morning. Again, this is a very, very aggressive trade. It is counter trend, and like I said, that's a reason I don't point it out most of the time. But we might be working a late filter entry signal here to short, which would, of course, not be very good for my long position. Otherwise, I'll try to nurse this up here a little bit higher. Oh, we've got the warning dot. The filter's back in sync. If it prints a sell signal, they're very likely going to try to make a run here at the low. Yes, absolutely. Salish is asking, can you explain the double dot signal? Okay, again, you need to bear in mind that this is a counter trend signal, and because it is a counter trend signal, it's a low probability signal. It's not as strong a signal as, say, the red bar buy, green bar sell signals that we sell or buy in the hawk. It's not as strong as the rule of three signal that we get in the eagle, and it's certainly not as strong as the soft edge buy signal that we get in the, which is perhaps our strongest counter trend signal. The double dot signal occurs when you get these little clusters of, in this case, buy dots in a downtrend. We have a bearish trend, and we're producing warning dots, buy warning dots. Now, this is not unusual. You see, when the market is in an uptrend, it's characteristic for it to produce sell warning dots. However, when they start to cluster, when they start to bunch up like this, and you get 2 or 3 or sometimes even 4 in a row, that's suggestive that there's a considerable amount of buying pressure entering the market. The only time you really consider the double dot signal is if you can match it with a previous swing point. If you can look back in your chart and you can see a previous point and say, yeah, okay, last time the market was here, this is what happened. Now, this would be even a stronger double dot signal if, let's say, the market had rallied way up to here. That would be much more inviting, because it would show us that there was a lot of buying pressure here around this 48.46 area, and that the market rallied all the way up here to 48.70, right? That would be very, very strong incentive to buy. As it is, in this case, we rallied up to around 48.62, which is decent, but, you know, it's not as strong. So it's very important that you can look back into your chart and tie it in with another reactionary swing. What the double dot signal is doing is it's essentially warning you of a double top or double bottom. That's really how it ends up playing out. So let's see if I can find you another example. Okay, well, this one's not bad. So right here, we have, usually it only requires 2 dots, but in this time it built 3 dots. So we have 3 dots here, and looking back in the chart, I can say, oh, last time prices traded at this level, this was the result. There was a decent decline lower, and so we have the double dot producing, and now we get our sell signal, so we go in and we short from here. The only nice thing about a counter trend signal is that it's very obvious where to place your stop. Right? You're going to place your stop above this little swing high. Because it's counter trend, we usually want to go in fairly late. So don't go in for your full risk exposure, go in maybe for a single contract. And then from here, the market, oh, look at that, just flinched before the, oops, sorry, wrong trade. So the market would decline from here, and let's see if it gets all the way down to this level here where it did before. And yes, it does. All right, so that's the whole premise of the double dot signal. It's really just a heads up that you may have a double top or a double bottom, but it's, again, counter trend. You don't want to get too crazy on it. If the trend is changing, you will get a trend change signal, right? So the double dot, it's not always necessary to jump on it really early. Okay, so I hope that makes sense. And yeah, now that the market's heading a little bit higher here, if we can break this little high here at 48.54, then we should be in good shape to reach our profit objective. Otherwise, I'll get a little bit more aggressive with my stops. All right, ladies and gentlemen, I will see you again tomorrow morning, and we'll talk to you then. Bye for now.